Good morning, everyone. Today is the 22nd of August, and this is the Moneyball Morning Report for the Benzinga Pro platform. It is a Thursday. Thursdays and Fridays are more likely to disobey the general ATR of a range from high to low, and because we had maybe news on the jobs coming in so changed, right? They did revisions that were like $800,000 below, but you know, those numbers aren't real anyway. And if we thought they were, well, then now we know they aren't, but they have never been real. They're only approximations, and sometimes they're very bad approximations. No place for a tinfoil hat in my mind, although I do keep one in the drawer, so it's not like I'm giving anyone benefit of the doubt. These are just, well, I am giving them benefit of the doubt. It's just this, you know, it's a calculation. It's not real. It's never been real, and it's always been wrong, and it always gets revised, and it got revised by a lot. So there we have it. No need to get our knickers in a bunch. But anyways, as we move forward, we just had a great big spike up into the 2.68. I am on the 1 hour chart so that we can see what's going on here. We've got a very nice bell curve and breaking out of it. So what does that tell me? It tells me we're in another breakout formation. Okay, so here is what I see from low to high. Right? That's the majority of the bell curve, and it's also the majority of the price action, which that's how it works. So if indeed we are seeing brand new highs in the near future, what is going to happen is we are likely to come back and test. It is still by the dip, coming into maybe 56.45 or so, and then, you know, we rocket higher. That is what it is. It is what it is. And so we are moving higher as job numbers move, jobless claims move higher. That does not seem reasonable, but the market is, you know, it's a junkie that loves lower interest rates. All right, so that's what we get. Pullbacks or buy zones, 56.46. Let's take a look at the daily. We can see that we're breaking out of this 3-day range, and you know, 56.75 looks like the next line in the sand. Let's take a look at SPY. For those of us that took the short iron condor, it's going to work out fine. A lot of us get very nervous when we don't need to, but it's because we're not really clear on what triage should be. So not to fret. Here's the thing. As it comes in, the pullback is going to be the next bounce zone for happenstance. And so we might be able to get out of this for, I don't know, maybe 40, 45 cents. So instead we make 20% instead of 50%. All right, so there we go. The numbers up at the top, 52.50. The numbers at the, 562.50 to 565, and then the number below, 559. All right, jobless claims. What time is it? I have no idea what time it is. Isn't that terrible? Really? That's insane that I don't really know the exact time. All right, so that's what we're looking at. Pullbacks or buy zones, 559. We are above the close of the prior day. If we come into the heavy congestion, we'll run it up the flagpole here, and that's 560. Deeper dip would be that 559.30. All right, let's take a look at the Qs first, and then we'll come to the NQ. All right, taking a look, same sort of thing. Buy the dip. Pre-market low looks like a pretty good area to buy that, and that's somewhere around 482. Next line in the sand, 486, and then the value area high is 488. Heavy congestion sits at 493. So that is what we're going to look at. Deep dips are going to be at 475. So not particularly sure what the market is going to do in the next 5 minutes with the jobless claims coming out, but we'll see shortly. Dips are clearly buy zones. It is buy the dip. Do not get caught shorting in this environment. It's going to rip you to shreds. All right, just a minute ago, we moved almost all the way up to 20,000 and got jammed. I mean, they just reversed it, literally almost 50 points. And so the NQ continues to rise and move very rapidly and very noisily. It is quite extended. Let's go to the 1 hour chart and let's plug in our opening range fibs. You can see it came right up to that 2.618 and collapsed. Dip buying is going to be the order of the day, and that 1 hour chart brings us to 19,940 all the way down to 19,924. We know that real break, we had a ton of congestion at 910 to 915 yesterday, and then it broke well out of that formation. But 930 to 930 to 935 is likely the bounce zone that's going to give us a nice clean lift to the upside. You might say, Anne-Marie, these numbers, they look so good. As soon as I close the level below, maybe I can short it. Yeah, maybe you can. But I like using it in the direction of trend. Take a snapshot, look really closely. I like using it in the direction of trend, and that means our pullbacks and buy zones look very nice from a trend perspective. All right, lastly, we're going to take a look at the YM. Today I am on Top Step TV Live. I'm going to be sharing these numbers, going to put them up in the Top Step X platform so that we can look at them. YM a little bit noisy, but still collapsing off that 1.618 formation. And, looks pretty good. Looks actually really good. This is, interestingly, it's better than the opening range, which is pretty bizarre. The initial balance that we normally see from 9:30 to 10:30. This calculation at the opening candlestick formation seems to be doing much better at this time. All right, so buy the dip. Well, what do you know? Here we are. Here's a dip, 41,028. This is a very sideways formation, so if you are buying the dip at the VWAP, I would say you see the prior resistance. If you see it, take some profit, and then, if it gets back into this area, then you can take some more profit, raise your stop, whatever you need to do. This is also a big dip buying zone. Overnight, it fell into yesterday's VWAP and the point of control, where it broke down, had a negative retracement to the same opening range as the Fibonacci here, and then began to bounce. So very interesting price action, but clearly, folks, it is a buy the dip environment. Please do not get on the wrong side of these trades. They will shred us. All right, take care, and I'll see you on the platforms.